7:45, welcome back to our final segment. In this segment, we focus on your opportunities for investment with our friends from the Unit Trust Corporation. We have a technical strategist with the UTC, Mr. Kerron Blandin. Good morning. Sorry? Oh, sorry, my bad. Phillip Williams, my bad. I saw two names here. Thank you for joining us this morning. My apologies. Today we're focusing on the opportunities in the energy sector and also the inherent risks. What are the current trends driving energy globally? And what's the expected outlet for the sector? We seem to have had some stabilization of Middle East a bit. Yeah. Does that help?
It certainly helps, but if we look at the globe as a whole, globally, economies are recovering, coming off of the heel of the financial crisis. So what does that mean for energy? It simply means once economic demand is picking up, the demand for energy will pick up. Planes, trains,
everything,
automobiles, in every aspect, every aspect, every facet of our lives, we use energy. I think people think very typically too of what, maybe use it for heating, maybe use it for automobiles, but just think of petroleum. The laptop that you have, cell phones that we have, the things that we use on a day-to-day basis. So once the economy is on the pickup, the demand for these goods will increase. So the demand for energy globally.
How much of an impact energy stocks now, energy assets, given the increased demand of the big countries, India, China, who are developing quite more quickly than comparatively than the rest of the world?
Certainly. China actually is a major component of that consumption and demand. Certainly, because speaking about the growth, acknowledging that developed nations are not growing as quickly as the emerging markets, so you find economies like China basically picking up the slack. So if growth in these economies, particularly China, is not doing that well, it does not augur well for the rest of, for emerging markets. It doesn't augur well for the rest of the economy or the globe going. So certainly you need that demand from these economies. It is robust right now. Yes, I know, growth in China is upwards of somewhere around 7%. That is expected in the second half of this year to be a lot better. And once growth is stable in China and these emerging economies, the demand for energy would be there, certainly.
With that said, what are the opportunities for would-be investors in the energy sector globally? Well, let's start with Trinidad and Tobago and then moving out.
Well, certainly, let's just, starting locally. Unfortunately, in Trinidad, we don't have that much opportunity. Reason being, we haven't had the opportunity to participate in some of the projects that, as you would know. But certainly if you invested in NEL, which is listed on the local stock exchange, that has shares with NGC, once the price of natural gas is doing well, this will augur well for the bottom line, for the revenues of NEL. It would be passed on to the investor. So from an equity standpoint, with shares, you can invest in NEL. For the investor that is a bit more conservative and said, well, listen, maybe I don't want to invest in equity, maybe I want to take a fixed income approach. It's not as easy to invest in a bond, but what an investor can do is look for products that invest in energy-related type projects. Certainly at the Unit Trust Corporation, we have the TT dollar income fund, we have the US dollar income fund, and these funds invest in energy-related products locally. So if an investor wanted to participate in that upside, now granted the return, sorry that I didn't mention, the return on the TT dollar fund is 1%. The return on the US dollar fund is 1%, and the return on the TT dollar fund is 1.1%. Now somebody might scoff at that and say 1%, but keep that in context in terms of where rates are globally, what central banks have done to bring down the cost of borrowing, to make it basically to stimulate the economy. Yeah. Right? So rates are low right now.
To encourage investment.
So to put that in context, 25 basis points, that's the Fed fund rate right now. 10-year bonds are trading anywhere around 2%. If you are getting 1% and your cash is on demand and your capital is preserved, that's an excellent.
We've been joined by your colleague at UTC, technical strategist, Mr. Blandin, Kerron Blandin. Good morning. Thanks for joining us.
Good morning, Paul.
Thanks for having us. The traffic can be something else this early morning. We're talking about the opportunities now for investment in the energy sector. Philip spoke about locally. What are the opportunities globally?
Globally, you have many opportunities, but that is under the condition that you have an international brokerage account. You have companies like BP, BHP.
What's an international brokerage account?
An account that allows you to trade stocks and bonds, possibly internationally. So that, of course, it will be done in US dollars, and you would have many opportunities, but it requires a certain amount of capital, it requires the availability of US dollars, those things. So you have many opportunities, as I said, the big companies, Chevron and ExxonMobil, BP, those companies are listed globally. But locally, we don't have many options.
What are the risks involved in the energy sector at this stage?
I mean, there's risk. Kerron mentioned an international investment, investing in stocks. Let's think about stocks as an asset class. It is already volatile, right? You have information flowing left, right, and center. Investors are looking for, when earnings releases come out, investors are looking at economic data. Investors, they're paying a whole lot more attention, as I mentioned, to what central banks are doing. So when these announcements come out, the anticipation is that is there. If you were an investor and you said, well, listen, I wanted to invest in BP, and you expected the earnings to be, let's say, for example, 50 cents, and it came out at 49 cents. What happens is sometimes investors panic. And what we would like to think is that investors are rational beings, or stock markets are rational, and that is not the case. And what happens, you have an investment where fundamentally it's actually very strong. But listening to the noise on a day-to-day basis, that message can actually be lost. And you are now find yourself disposing of that asset. What then happens is the asset can now turn around, and you'll be getting a better return. So stocks are volatile. Oil, natural gas, these companies, oil as a commodity in itself is volatile, just based on what affects the price.
So how then do we sift through the noise, especially as new investors in the energy sector, when you're looking at the Dow, the New York Stock Exchange, or London Stock Exchange, and you're seeing the volatility of oil and not so much gas? How do we sift through the noise and stay the course sometimes for the long-term good?
I think we have to have a broad outlook in terms of what the economic environment is saying to us at the moment. Right now, I think Philip would have probably mentioned earlier what is going on in China, where there's a slowdown in China. There's several issues in Europe, where those things where the sovereign debt crisis can possibly dampen demand. Those things are things that you need to stay on top of at all times, and we need to know what the global picture is, because the strength of the global economy really determines the strength of demand for oil and energy generally.
How much of a factor is America's thrust to energy independence, especially in light of the increased shale gas exploration?
Actually, that is very, very important in terms of where resources are, because if you see look at where the energy sector is going, think about non-renewable energy. It's exactly that. It cannot be renewed. So at some point it's going to be depleted. I don't know that we live to see that, but at some point it is going to happen. So discoveries like that shale oil and shale gas is actually very, very important from a supply standpoint.
But as an investor, how much should we be paying attention to that in the short to medium term?
You pay attention because obviously if there's excess supply, it possibly may mean the prices may be declining, right? Locally, the price of gas actually, if that goes down, that's not too good for us from a revenue standpoint, from a GDP standpoint. If you look at where GDP was last year for the country, it was at 0.2%, and that's all because of some, yes, maintenance issues, but certainly because of the gas we would have been exporting to the United States, whereas at one point it would have been like around 80%. It's now somewhere around 22%. So the revenues there, well, certainly we have to find other markets to export to.
And we've been diversifying our markets.
Yes.
And speaking of diversification, when we're considering investing in the energy sector, one of the mantras from the UTC is also diversify, diversify, diversify. Yes. What are there natural fits with energy sector portfolios?
Well, at the moment, we have the UTC Energy Fund. That is an excellent play in the energy sector. First of all, you shouldn't have all your eggs in that one basket. Yes.
To start with. It shouldn't all be energy to start with.
Yes, exactly. You shouldn't have all your money in the energy fund. But at the same time, in terms of the diversification that the energy fund itself gives you, it gives you diversification among industries within the energy sector. So you have exploration and production companies, you have refineries, refiners, you have transportation companies, you have the integrated oil companies, which are the big ones, the Exxons and the BPs. You have all of those within one portfolio. We also sometimes have other players like utilities, which use natural gas in their production, that sort of thing. So within the energy fund itself,
so you have to look downstream.
Yes. We look upstream, downstream, midstream, everything, basically.
Is investment in the energy sector for the big players alone? There's sometimes a presupposition that it is for big players with millions of dollars, as you said earlier on, that account you need to have and readily available investment cash. Is that accurate?
That's absolutely not the case, Paul. Actually, this is where the Unitrust Corporation has actually changed the landscape, because if you wanted to come in and walk through our doors, you wanted to invest in the energy fund that Kerron was just mentioning, that's just $100. If you wanted to participate in the TT dollar income fund and the US dollar income fund, which is again is a more conservative investment. So think about the risk, think about the reward, know the products, but certainly from an accessibility standpoint, you can walk through our doors and it's very accessible.
And how much are new customers delving into energy in terms of the opportunities?
Well, it's certainly one of our bigger funds, not the biggest, because those tend to be the legacy funds. But in terms of our international suite of funds, I guess the majority of the investment goes to the energy fund.
And would you say these are medium to long-term investments as opposed to comparison to other types of investments?
Yes, it certainly is, because energy, as well, all international stocks are volatile, but energy sector stocks are pretty volatile in comparison to even those international stocks, because they're related to commodities. So it naturally attracts the type of investor that wants a high return, but is also willing to take on a little more risk, so that at the end of the day, the horizon should be very long-term based on the extreme volatility in the markets.
And one more information at ttutc.com.
Yes.
All right, so we've been talking to Mr. Kerron Blandin, technical strategist, and also portfolio manager Phillip Williams about the opportunities that abound in the energy sector. Once again, the mantra is diversify, diversify, diversify. Inside of the energy sector opportunities and also outside, to make sure and have a diversified portfolio. And that is one of the greatest gifts you give yourselves in terms of mitigating risks. Gentlemen, thanks for being with us.
Thanks so much.
And once again, go to ttutc.com for more information. That is our show for today. We thank you for joining us. Don't forget, join the Sharama Chan, James Saunders, Ian Wallace tonight for the C News Major at 7. And join us again at 5:30 tomorrow morning for Wednesday's edition of First Step right here on CTV. And of course, updates all through the day on that UNC screening process on Talk City and right here on CTV. Have a great day.